Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Shahrawat, Director of FinTech Investment Banking at Rosenblatt Securities, to discuss what's ahead for the FinTech space after the 75% decline in FinTech stocks year to date. Dee, it's great to see you as always. Welcome back to Trade Talks.
Great to see you, Jill. Thank you for having us again.
How have public FinTech stocks performed in this downturn, and what sectors have done relatively better or worse?
Sure, Jill. Not a pretty picture, obviously. The whole market's down significantly this year, but just to put things in context. So year to date, if you look at the FinTech index put together by F Prime Capital, which is the CVC arm for Fidelity Investments, as of last week, the S&P 500 is down about 22%. So through Thursday of last week, Nasdaq was down about 30%. But as you said, the FinTech index of 54 public companies is down about 73%. So clearly they've done pretty badly. Firms like Coinbase down about 75% year to date. Robinhood is down about 68%. So the entire FinTech index of public companies has done pretty badly. Two notable insights are that obviously anything consumer focused has done pretty badly. Anything that's with a great exposure to crypto has done pretty badly. And once high flyers in the buy now, pay later segment, like Affirm, had done pretty badly as well. So there have been some sectors that have done badly. Others, like B2B infrastructure stuff, has kind of held up better. But across the board, it's been a pretty tough picture for the public fintech stocks year to date.
What implications does this have for private fintech companies, including the 322 fintech unicorns that exist?
Sure, good question. So first, I'd like to just clarify that we've got to take, no question, no way to hide behind the fact that the last 12 months has been very tough for fintech companies. But I think if you zoom out over the last 5 years and look at fintech companies in contrast or relative performance to S&P and Nasdaq, S&P and Nasdaq over the last 5 years, 2017 to 2022, has been up, between 25 and 40%. S&P between about 29%, and Nasdaq is about 40% for the last 5 years. The fintech index is up about 50%. So the fintech index, longer term, the last 5 years, has done pretty well. Obviously, a lot of the fintech companies have been more recent. They've almost about 15 fintech IPOs last year. So 2021 is a pretty good year. So first, I'd like to just put things in context that some of the decline in public fintech performance that we've seen has been a clawback or a pushback against the massive multiples we saw in 2020 and 2021. So longer term, things are still up. The question that you had was, where does it leave us for the 322, which is a pretty outstanding set of companies that are on the runway, ready to get a signal from the ATC, which right now seems to be the Fed, that the moment the markets improve, all those 322 companies, could, I think, over the next couple of years, be on the on-ramp for exits, whether it's IPOs, maybe a few SPACs as well, even though the SPAC stuff has turned around pretty dramatically last 12 months. So we're pretty hopeful for the next stronger companies. And they're not 50 companies, they're over 300 firms around the world that are large enough to keep growing. I'll also sort of mention that if you look at the financial performance of public fintech companies in first half of this year, and we ran some numbers about the top 30 publicly held fintech companies. So through June 30th of this year, the revenue for these fintech companies was up almost about 50% over the same period of last year. So first half, January through June, financial number, top line revenue number was up 48% for the average fintech company. That's compared to 16% revenue increase for S&P and about 25% increase for Nasdaq companies. So the fintech companies continue to do well from a financial standpoint, but obviously multiples and investors have been pretty tough on the fintech space.
How are investors responding, and what can we expect for funding, M&A, and IPOs in what was once a really hot sector?
Yeah, I think longer term, we're still pretty hopeful. Listen, the IPO sector, obviously, the IPO markets have been pretty close to any growth companies for the time being, and that includes the fintech companies as well. Fintech companies tend to be high beta stocks, so when growth stocks are out of favor, the fintech stocks do pretty badly. So the market conditions for IPOs and SPACs for fintech companies currently tend to be the toughest that we've seen in the last couple of years. But those things can improve in the next couple of years as well. Moving into funding has been coming in, but through second quarter of this year, funding was down about 44% over Q1 numbers and pretty sharply down year over year as well. So I think funding conditions are going to be tough for companies for the next 6 to 12 months, but that doesn't mean that companies with high quality growth, great management teams and good sectors are not going to continue to do well. On the M&A side, I think the fact that the IPO market seems to be much tougher for companies to do exits, we expect a lot more M&A activity relatively in the fintech space. And if you double click on that inside there, the acquisitions that are happening are tending to be more about strategic acquisitions rather than financial sponsors, buying up fintech companies.
So overall, Dee, it sounds like investors are keeping the faith when you think about it through a longer term lens.
Definitely, Jill, and we have it's tough to keep the faith in the time being, but we had a great panel of investors about a month ago that we had a webinar in talking about the future, including with Gary Offner, who heads Nasdaq Ventures and a great, tremendous portfolio of investments. We have a couple of other investors have been looking at the longer term picture. So I think it's very much, batten down the hatches, ride out the tough times. But longer term, we are very hopeful for the fintech sector. And I think we're going to once the market turns around and becomes more favorable to all growth stocks, the fintech universe is, I think, going to do much better as well.
All right, Dee, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you, Jill.